What's up, guys? Dwight with Defying Finance. Today, I wanted to talk a little more about what I think is possible with the Federal Reserve and the real estate market. And this is really just what would we call this? We're just thinking through what may be possible here in the future or what may be probable. And you can kind of decide that. Maybe you comment below and see what you think. But I didn't really want to go through a bunch of web pages here. I just want to dive a little deeper into the thought process I've had for about probably the last year, really kind of thinking about what's happening. And this has to do with real estate and the mortgage securities that the Federal Reserve Bank owns. So for all you know, the Federal Reserve Bank owns your mortgage. Now, I'm not sure if they use, let's say, other banks like Wells Fargo actually holds the mortgage, or they service the debt side of it, and the Fed is really the owner. I haven't even gone into that. I'm thinking about the overall kind of macro picture of it in the United States, at least, how this may work. So if you're a real estate agent or a broker out there, maybe you have some ideas as well. But for everybody, I want you to think about this. Now, I'm not going to get all conspiracy theory on you or something, but I'm sure many of you know who Klaus Schwab is and his comment about how you will own nothing and like it. And I can see how that actually may seem good to a lot of people, right? You don't own your home, but your rent's really low. So you don't care. You have more money to use in life or to go have experiences or whatever. There's some reasons you can play this out to make it sound good. But I want you to think about this. So the Federal Reserve owns approximately a third of all mortgages in the United States for single family. Okay. Now, we don't know how this is going to play out in the future. Supposedly, they're supposed to be selling some of these into the market. Well, that's going to be kind of hard to do if they're sort of collapsing the market at the same time. So maybe that's part of the issue. Maybe they say, okay, well, we don't have to sell anything because the market took care of a lot of this debt in the system that's destroying currency or destroying reserves. So really the money supply could technically be shrinking in terms of credit, right? Credit is also kind of a form of money supply. So if the Federal Reserve Bank was to allow a bank to have more reserves, they can loan more. And when you're using your credit card or you're pulling out a loan, it's not how it used to be where you're taking my deposit, right? And the bank's paying me interest. You, in partnership with that bank, just created money out of thin air. Now, if you don't pay that back, poof, it just goes away, right? Money supply dies. So really that's what they're playing with here. It's kind of crazy. But I want you to think about the housing market like this. Obviously, the housing market's rolling over across the United States as one picture, right? Now, obviously, as I've said many times, in certain markets, it's not really going to do that. Maybe you have a 5% fall. Maybe it goes up 10%, right? And that's even going to be county by county and city by city. So again, when I say that, I also mentioned don't be stupid, because too many people get caught up in the idea of, no, that can't happen here. That it's really because you don't want it to. But we have to look at the data when we make those types of decisions. But here's the deal. If the entire market as a whole, numbers wise, is rolling over in real estate, you're starting to see price drops around the United States. Go look at Austin, Texas, look at Boise, Idaho, even in Coeur d'Alene, Idaho. Like those were big booming areas, places in Utah, right? When you're seeing that, and now CNBC, right? They're making these posts about how a bunch of sellers are FOMOing. They're realizing, oh my goodness, I'm missing the seller's market. So they're dumping that supply onto the market. You're seeing others starting to drop their prices, right? So this is going to have a chain reaction effect. So let's say the Fed never gets the opportunity to liquidate any of their mortgage-backed securities, okay? Now, it's possible we do go into a credit crisis, and I'll get to that. That's a whole nother ball game, right? And that could come from China's issues, or something blows up in the Japan's financial system. Something happens with a big hedge fund here. We don't really know. some bank may have a ton of leverage and it could turn out really bad. That can really affect the housing market. So maybe if I can remember, we'll get to that. But here's the deal. So if the Fed ends up coming to you as a homeowner, let's say you bought a house for 600,000, maybe your payment's $3,000 a month. Okay. You put 3.5% down or something. Well, what if you're struggling right now, right? You're maybe it's 50% of your gross income is going towards your mortgage. Okay. And you're starting to miss payments or you're considering missing payments. You see that the Fed is going to bail out the individual, right? Now, just to let you know, there's over 2.1 million pre-foreclosures across the United States. That means that people are 90 days late or more. They have notice of defaults. This is a shadow inventory that's sitting there right now. It didn't have to be counted before because the whole COVID thing, right? Well, starting March 1st to April 1st, those had to be counted. And if you go to realtor.com or Zillow or Redfin, right, you start pulling up your area, start looking at those pre-foreclosures, what may be coming on the market. And, Sacramento kind of area, I showed on one of my other videos, there's quite a few. So we don't know if those will come to market or not. Some of these people may be behind on their payments, but there may be a decent amount of equity, right? Maybe they can sell it, cover all their fees, closing costs, paying the real estate agent, paying off whatever payment they missed to the bank, and they just walk away, making nothing, but they own nothing and they can go rent, right? Maybe that's going to be the case. But that also brings that supply in the market. So they start to kind of hurt themselves as everybody starts to do that. But you can see where, if I remember right, I think it was over 600,000 homes, maybe it was month to month numbers during the 2008 crisis. That was kind of the peak, 650. Well, we have 2.1 million sitting there right now. That's a huge amount of inventory that could come pouring on the market. If you go to the Federal Reserve's monthly supply chart and you can look, well, what's the monthly supply in the United States? It's increasing dramatically fast, right? So there's a lot of reasons, that doesn't include investors, that can load these up on the market. So if this starts to drive prices down, people get kind of trapped in these homes, they start to lose a bunch of these homes, the Fed could come in and say, okay, we'll forgive your debt. And you may have to pay income tax on that. Okay, this, if you've ever done a short sale on your property, maybe you wiped out 200,000. The government says you need to count as income and pay that as taxes. We don't know how they're going to do that, but let's set that part aside. The point is they forgive your debt. Okay, the Federal Reserve Bank now owns that property, and then they rent it back to you. And what if they rent it back to you at $1,500 a month? You were paying $3,000. Maybe to rent that house in that market's $2,800 a month anyway, $2,500 a month anyway, right? But they rent it at $1,500. And you know why? Because they don't have a normal financial statement like your company does. They can print money out of thin air, right? This isn't even government. It is a private bank, okay? But they're in control of our money supply, right? You have the U.S. Treasury too, but I mean, it's almost like the permission comes from the Fed in a way, right? So we don't know who they're loaning money to. We don't know what countries they've loaned United States currency to. We have no idea. We can't audit them, or we haven't, at least. Our politicians haven't, gone to that level. We need to. But if they make someone that offer, who's going to turn it down, right? Who's going to complain? I mean, it would kind of, well, I guess who would complain would be the people who don't own the homes, who say, hey, what about me? If I would have known that, I would have bought a home. And now you are the equivalent of the people who want their student loans to be wiped out, right? So it starts to get a little hypocritical if you're against that. So think about that for a minute. But here's the deal. They do it to save the housing market in the United States, to save the individual, right? So it sounds great, but this is a way for government to get around implementing rent control, right? If you're a politician, that's sort of a bad word. I guess it depends on your area, right? You don't want to come out and say, we're going to do rent controls across the United States as a government. That's not a good thing. Okay. But if you could have the Fed do it while saving, supposedly, the housing market, they can control the rent price because they would own so many homes across the United States. When they start to set those new rent prices, because they don't really need that income, they just really got an asset for free because they print the money. It's crazy, I know. But basically, imagine your rent getting cut in half compared to your mortgage. You can't even go to your neighbor's house to rent that same exact house for, say, $2,500 a month. You're saving $1,000 a month, right? That's a form of stimulus in a way, right? Now you got an extra $1,000 a month that you would have to spend on rent somewhere else. And it's unrealistic, right? But you have an extra $1,000 a month that you go spend on crap you want to buy, right? To grow GDP, and the government can say the economy is growing, but it's fake. So it would be a form of stimulus. And think about if you are an investor and you own the property next door, but you need to rent it at $2,500 a month to cash flow because you put 20% down on that property, right? Well, now your neighbor's house, he will never become a renter in your place, ever. Why would he? He only pays $1,500 a month. All of a sudden, now you have a form of price controls across the nation. They can really bring that rent down. And you just lost the supply of renters that we would call it demand, I guess, since they're people. They're never going to become renters of yours. There's no reason for them to leave, right? It would be so much more money to buy a place, and real estate prices wouldn't even need to fall. Because think about this. If you're the Federal Reserve Bank, why would you sell that property? That supply has now left the market forever. It will never be sold on the market again. If you had a printing press in your garage right now, and you're looking down the street and you said, hey, that house is $500,000. Let me just click a couple buttons here and we'll go ahead and print that up and buy this home, buy this home, buy this home. That's exactly what the Fed's doing. But they're buying the mortgages from these banks. Another way to look at it is, let's say a bank starts to fail. We start to have a credit crisis, okay? They could come in to bail out the bank. Everybody starts to get pissed off like they did last time. Oh, you're bailing out Wall Street and you're bailing out the big banks. But they say it as, guys, we need to bail out these banks. And by doing that, we're gonna forgive your debt on your mortgage, and we're gonna rent that home back to you at a much lower price. The same concept, but they saved the banking system at the same time. But now they own all these mortgages across the United States. They're technically implementing a form of rent control by lowering that rent across the United States, right? It's not a real economy at that point. We don't really have one now anyway. It's all based on credit. But the point is, now being a real estate investor doesn't sound like a great idea, right? You're not going to buy a property to build to rent to anybody, right? Because number one, who's going to rent it? If they're already in one of those homes, they're not leaving. This is exactly what happens in a lot of low income housing. There's one down the road here from us. And why would you leave? If you're only paying $350 a month, $400 a month, and the rent next door is $2,500 to $3,000 a month, why would you leave? Right? You're gonna stay under that income as much as you can. You're gonna work under the table. That's exactly what happens. And do you blame them? Like, why would you leave? Okay, that's what you would start to see. So you would be happy while you own nothing, right? So I think this is a real possibility, and consider the fact that they already own a third of all these mortgages. So this really already exists in a way. The only difference would be what happens. We haven't had the Fed have to take over a home that's foreclosed on yet, right? So we have a real crisis coming right now. We are going into a recession, and we don't know how this is going to play out exactly, but I think this is a great thought experiment to really start digging into what would happen if not only the Federal Reserve owned these mortgages like they do, but what if they own 50 or 60% because they're bailing out these banks? It could happen very quickly. You can see where I'm going with this. and then they rent it back, it would feel great to be able to save, I mean, that amount of money. But like I said, it doesn't mean home prices have to fall, right? There may not be an incentive to build homes because that person who's renting there is never going to buy it as a personal residence when they can rent here. And there could be rules they come up with. Maybe it's okay if you rent one of our properties. Maybe it's I don't know, like a subsidy in a sense where the government says, okay, if you own something by the Federal Reserve, or not own, if you're renting from them, you can't go buy a second home, right? Because then they would have to increase that supply. So maybe there's some sort of rules. We don't really know how that would play out. But I think it's a good idea to start thinking through this stuff as an investor. How would this work for me? What would I want to buy? What would take off, right? You're going to hear someone say, well, the Fed's not going to become a property manager. Well, nobody said they had to be, right? They could just hire a property management company. We have huge ones across the United States that could start managing these properties, right? What do you think Blackrock does? Right. So this can really happen. And those places like Blackrock, what if they get a bailout? What if they have to liquidate some real estate? And they can do that. They can liquidate some of this real estate and then go buy up some stocks at incredibly low prices because they'll increase faster. So there's a lot of pressure in the form of supply that could come on the market very quickly. So when you hear your agent saying, "Oh, there's a lack of supply," it's really not true across the board. It may be true in your specific area, but I'm hearing that in Sacramento, and it is not true. It is absolutely not true in this general area that, oh, supply is so low. You know, looking at the pre-foreclosures that are sitting there right now, I mean, that's a massive amount of supply right there. It's just not counted yet, but it's coming, right? Now, the thing we can account for, or we cannot account for, is what is the government going to do? What if they don't allow foreclosures, right? They just did it in the pandemic. So we don't know. That's why we have to be ready to pivot at any time. We have to, and I keep mentioning that over and over in all these videos, you have to be ready to pivot. You have to think through these things as an investor and say, okay, if I see this, then I need to make this decision. If I see, like, for example, I've brought this up before, universal basic income. Me and my wife have a deal where if we see universal basic income realistically start to become maybe a bill in our area, or maybe across the United States, maybe everybody's going to get $1,000 if you're over the age of 18. Well, I know right there, go buy a house, right? It wouldn't even matter what's happening right now. Just go buy the house, right? Because if everybody and their mom has $2,000 a month pouring into their bank account, what do you think is going to happen? They're going to want to jump to a larger home. They're going to be working from home. So now they need that extra bedroom. They'll have that money, and you don't want to be that seller at that time. You need to cancel that contract, renew the contract with the real estate agent at a much, much higher value. The person who wins just bought that one home, right? Because all of a sudden it's, oh, I bought a home last month and now I have $2,000 more a month. Or the one who just gets under contract, they're getting ready to close. The other people aren't really thinking about it. They close on it. Boom. Now you got another $2,000 a month. Your mortgage is $3,000. And it's like having $1,000 a month mortgage in the old world that just existed a week prior, right? So those are the types of things we're watching for, where we don't know what's going to happen, but we're thinking through these things. What am I going to do if I see universal basic income? At what dollar amount? What am I going to invest in if I see the Fed takes over a bunch of these homes, not just mortgages? Where will we see the market go in that sense? Would I want to be in stocks? Would I want to be a real estate investor? Right? I don't know. Maybe I have to sell something at that time. Does it make prices go up because that supply will never be sold? So now the supply, if you want to be a homeowner, has shrunk dramatically. And as more kids are being born, for example, well, you're going to need some sort of supply, right? I mean, of course, dyers are suppliers, is what I would call it, too. So as people die off, you have a huge baby boom generations dying off, right? So technically that becomes supply. So there's a lot of things to think through here, but I think it's very realistic. We're very close to that right now. You just need the right crisis, and people freak out. If there's one thing I think we could agree on is when it comes to money or food or water or something like that, people get desperate and they'll take whatever they need. So if one of your people in your household are losing their income, we're going into some sort of recession, you're going to lose your home. I mean, it's depressing, right? Um, they'll accept whatever. We just saw that in the pandemic. We've seen it over and over throughout history, all kinds of things. They'll accept whatever. You'll make up excuses in your mind why this is a good idea. Yeah, they're saving the banking system. In all reality, we need a lot of this to collapse. We need a lot of this debt to just be wiped out. Get the government out of the way, stop controlling the economy or trying to, and let us decide with millions and millions of transactions what we decide prices are going to be based on what I'm buying from you and you're buying from me and what I'm willing to pay and what you're willing to pay. Let the prices fall to those levels and we'll figure it out. That's how it had always been, right? But when you start to try to manipulate these economies with interest rates and printing money and really it's socialism for the rich and it's capitalism for you, right? And in real capitalism, no bank gets a bailout. No business gets a bailout. You run a poor operation, you're going out of business, right? Well, that's not really how it works in socialism. In a socialism, from a socialistic perspective, I mean, we really have socialism for the ultra rich when you're talking about big banks and huge businesses like Amazon. If Amazon started to fail, you can guarantee there's some sort of bailout coming, right? If they ran a poor business, then really they should fail because you might be out there creating a better business. Maybe you're operating it much better. You should take some of that market share. But unfortunately, these things are called too big to fail. So that's the socialism that I don't agree with, right? If you're poor at managing your money, you're poor at managing your money. You got to get better at it. And I want my products to be cheaper. I want my services to be cheaper, and that's what wealth is, right? Your quality of life grows. That's why I'm able to shoot on this camera. I have a great computer here. That's from real capitalism. We don't really have capitalism to that extent in the United States anymore, unfortunately. But there should have been in 2008. There should have been a lot of banks that failed, a lot of rich people that really got crushed. But we didn't allow that to happen. You suffered, and this time they actually sent those dollars to the people. And when we went out and spent those dollars, that's your price inflation that shows up in all these goods and services. I mean, the inflation was the printing of the money, okay, or the extending of that credit. You just don't know where it's going to show up. So another thing we want to be watching for is if there are bailouts, where's it going? If it's going to the banks, let's say the Fed buys a bunch of properties from the banks because some of these banks start to fail for whatever reason. That money, it would be like 2008, right? Where you start to see asset inflation. So after 2008 into 2009, you saw the stock market dive. Well, if that money is not really coming to you as an individual, what happens? Stock prices would go up, right? If it's coming to you as an individual, you're going to go buy a bunch of stuff, and that also will drive those stock prices up over time. But then you really see the price inflation in goods and services. So we want to be watching for that too. Where's the bailout coming? Is the bailout coming directly to the people where we're going to see that inflation come in and consumer goods? And if that's the case, well, maybe I want to buy stocks for certain companies that are producing those goods. Maybe I want to buy out of the country some companies that are producing those goods because you get to play the currency level of this, right? Where the dollar is technically falling relative to those other currencies outside the United States, and you own a company that's priced in that other currency outside the United States, right? So you're kind of getting the double whammy. The company's going up in value in that currency while the dollar's falling here. So there's a lot of ways to play these types of things, but we have to be watching and thinking through what's going to happen if this, what's going to happen if that. And from there, we need to make a decision. But ultimately, I just wanted to bring up that idea just as real estate agents out there and brokers, real estate brokers, and then stockbrokers out there. economic minded people just start thinking through these things and what would it look like if that was to happen, because I think it's a real possibility, especially since we're so close. They already own those mortgages to begin with. And 1/3 of the market right now, not including any others right now, that's a huge percentage. But anyway, I just wanted to leave that with you. Think about it. But like and subscribe if you thought that that was useful. Share it with a friend. And if an ad pops up, watch an ad. It's free content. Have a good one.